Thank you so much, Alex. We've kept the best for the last, and trust me when I say that, because both the budget as well as the Commerce Minister, while spelling out the US trade deal, has mentioned the MSME and the mid-market manufacturers to a great extent in taking forward the growth agenda of the country and the economic growth of the country. So let me begin by asking Mr. J.S. Gujral, first of all, with Sirma and with electronic manufacturers, what does the FTAs as well as the US trade deal mean in opening up the market and expanding the market potential and growth potential for the companies like yourself?
I think it's been a dream come true for the electronic sector. We have been in the industry for 40 years, and as Piyush said, we are stripped off all the demand by having the agreement with our competing countries. For the first time in the last 8-10 years, electronics has found a space at the head of the table.
Yes.
And I think it gives us an enormous opportunity to grow. Industry has to invest. Growth is not going to be easy. It's not like China, which had a 20 years of smooth run in a sort of a stadium with AstroTurf.
Right.
Current geopolitical environment is like you have to run a cross-country marathon.
Yes.
So the industry has to gear up. The government has done enough. Should it do more? Yes. Can it do more? A big question mark. They have their sort of limitations.
Yes.
I think industry has to invest in capability building.
Yes.
Capacity building is the easy thing.
Right.
Money is not a constraint today for credible industries. So you can get money from the market, from the debt, and you can create capacities. Capability is the challenge.
Okay.
And innovation. So we have to invest in R&D, on which I'll share my thoughts after the panelists have spoken.
All right. So innovation is the nerve center. But for this CAPEX cycle to really pick up, two things are very important. That is the debt side and the equity side. The funding has to come from either of the two places. So Paula, you have been an investor. You're also very bullish on Indian manufacturing prowess. How do you see the MSME mid manufacturers really taking the stride towards this opening of the market, and where is the money coming in from?
Thanks, Nisha. Great question, because like Mr. Gujral rightly said, the time for manufacturing is now.
Yes.
For various reasons. Of course, the government has made it, their priority. The whole China Plus model is right. We do need good capital. And
Yes.
by good capital, I mean a capital which understands the kind of timelines, the kind of investments, not just CAPEX, but also in terms of, innovation. To support innovation, we would need
Yes.
R&D.
Yes.
And I mean applied R&D. It doesn't have to be fundamental, but we do need capital that will support this kind of innovation. And technology adoption. I think there is huge possibility of jumping a few stages and getting on to manufacturing 5.0 even by the digital transformation. And capital can support this. And equity investors like venture capitalists who understand the role technology plays, I think they have to shift, gears a bit.
Yes.
And apply it now to manufacturing industries, to things like electronics, defense, and various sectors where one can really add a huge amount of efficiencies by adopting IoT, process controls, data, and so on.
That's right. Patient capital is the need of the hour. And unfortunately, the VC and the private equity community has really not looked at the manufacturing space. They look at other sectors, which are the few sectors of choice only. So Sachin, looking at the data and how MSME has really evolved in the last few years with the government support, Has there been a momentum build up? What does the data show? And are the states doing enough to really build those clusters as well?
Thank you, Nisha. I think that's a very, very apt question. So, adding to what my co-panelist, Mr. Gujral and Paula said, absolutely, MSME and in the current context when we are looking at the trade deals with Europe and with US, especially I'll say with Europe, if you see many of these geographies are built on MSMEs, right? Europe, the whole Europe MSME ecosystem is very strong. Very interestingly, 27th when this deal was happening, as CRIF is my parent company is Italian, and I was sitting with the chairman of the group, and we were just discussing that this deal is about to happen.
Yes.
And it was a big thing which happened for both India and Europe, and obviously US has followed. So keeping in that view, if you look at the MSMEs funding or, let's say credit to MSME or finance access to MSME, as we heard the view of a venture capitalist, but the key point here is that the insights of data or the level of transparency what typically a credit provider or an investor requires. Unfortunately, in India, it is a cycle which has been evolving. If I give you some of the data points, see, we have about 7.5, 7.6 crore MSMEs. We have only 2.5 crore MSMEs which have been given at least one loan any point of time. As of today, MSME loan book is about 40 lakh crore, right? And if you see the penetration today, the live loans, it won't be more than 12 to 15%, right? So you can see that that's a credit side of it. If you come to the investment side of it, it will be even far lower, right? But these are I would say this is the backbone, as we heard both the ministers, Honorable Commerce Minister and the Finance Minister. The growth of the country cannot happen without these 7.5 crore enterprises. And that is where data is going to play a significant role. They need to become more and more transparent, or they need to become more and more data centric.
Yeah.
And providers like us also bring certain value to that. But that's the ecosystem which needs to work, because that's where the credit and investment will play a significant role in making these sort of ecosystem players much more robust for the future.
So more data and more risk analysis. These two, how critical is it, Paula?
Extremely critical, because without that we are just speculating in the dark. We don't have a great amount of past history, so we do need current data which is robust. And I think a lot of the digital transformation that has already happened through various initiatives of the government are already making MSMEs more sort of compatible with data. And that is helping us figure out what kind of projections. So it's no longer simply Excel sheets. I think it is based on data, whether it's productivity, efficiency, supply chain resilience. All of that now is backed by data that helps us mitigate the risks or project the right kind of returns, the time frame, the various milestones. So extremely critical for MSMEs to really adopt this. And, we talk of AI, but this is really great application for MSMEs to use AI ML to generate much more confidence for getting more equity into their companies.
So use of technology is extremely critical, but innovation is also very critical. From Sirma's point of view and from the sector point of view, how do you see this particular space, and how is the government really supporting innovation?
I'll first like to add on the SMEs. I think there has to be a structural shift in the whole landscape.
Right.
Small is no longer beautiful. We like it or not, it's a fact. We are competing with global companies. Once you have the FTAs, it's a double-edged weapon. Our markets will also be open, and we have access to the global markets. So I think the SMEs have to move into the value chain and let the big companies do the front-end product marketing.
Right.
And transitioning from a small scale to a medium scale to a large scale is comparatively easy if you're organized, if you're professional. We were less than $100 company, $100 million company 3 years ago.
Yes.
Today we are approximately $550 million. Now it seems very big, but when you talk to global companies, they talk of 30 billion, 5 billion. Jabil is an EMS company. It's a $35 billion company. And the entire electronic manufacturing landscape in India, leave aside the Foxconn, including Dixon, us, all the listed space, is nowhere near that.
Does this US deal, opening up the market in several other regions as well in the world, does that give you that opportunity? And is it easy to convert into an exporting sector?
Absolutely. Absolutely. We have been exporting for almost like 30 years to Europe. We have not been present in America to a large extent. America is a key market for us going forward. Till now, our exports are about 1,000 crores, and 65%, 70% of that is to EU. Servicing export markets requires a DNA.
Yes.
Please imagine a customer sitting 8,000 kilometers, 15,000 kilometers, or 4,000 kilometers, and you are feeding his factory line. In EMS, we normally sell it to our customers and they integrate it with their overall part. Now, if you have to feed his line, one line stoppage will erase 2 decades of good supply, because he'll remember the one line stoppage which he has. So I think the Indian industry has to invest in systems, has to invest in automation, has to invest in R&D.
Right.
And R&D, we are small companies, 1,000, 2,000, 5,000 crore companies earning 500 crores. How much they can spend in R&D?
Yes.
Unlike China, where the government funds it because it's not a democracy, it's a dictatorship. So I think for innovation and R&D, we have to adopt the cluster approach,
Yes.
where industries should join hand, comparable players should join hand, form a R&D company. Each one of the manufacturing companies, say 5 electronic manufacturing companies, create a R&D company. Each one of them is a shareholder in that company. So there's sort of convergence of interest.
Yes.
On or alone, on a standalone basis, R&D would be a non-starter because all the companies are listed, and unfortunately, you have to go to the markets every quarter with results.
Yes. So you have to compete also, and you have to collaborate also. That's the nature of the new age, sectors, any which ways. But how can investors really play a critical role, Paula, over here? And will the opening of lucrative markets at lucrative tariff rates, will it attract equity investors into R&D, patient capital, because it will lead to higher exports and potential of higher income?
See, if we want to grow this ecosystem, and it can be really lucrative, I think this is absolutely necessary. Your total R&D spend of our country is still less than 1%, even though it may have increased, but as a percentage it continues to be low. And if you look at all economies which have scaled, there has been substantial investment in R&D.
Yes.
I think as patient capital, this is a key area of interest, and we have seen it in space, for example, and defense, that investors have come in and have funded with very measured capital, albeit it has, started a whole phenomena in certain sectors that funding R&D can lead to innovation, and very quickly we have seen a couple of listings that have happened by funding R&D. They were from incubators, Agnikul and so on. So I think now there is a trend and there is a confidence. And most importantly, there are now role models. There are companies, like Mr. Gujral's, Equus, and so many others who are actually showing that this can transform, whether it's, their position in the world or just potential of spinning off many other companies like that. I agree we are still very small as a hardware industry or research based, but that gives us opportunity. As investors, we want to see growth potential. And I think that is now coming up.
All right. So while equity investment is easier in terms of getting it in and utilizing it, but it's still a much more expensive way of really fundraising. But debt is what really fuels this particular space. And out of all my analysis and talks with MSMEs, the biggest concern and challenge in this space is the credit, availability of credit. Now, Sachin, from your vantage point of view, how is the credit risk developing? Many banks shy away from this. Also, the cost of acquisition is high. But how is the risk propensity? Because till that comes down, not many lenders would be attracted.
Yeah, very valid question. So I'll just give a couple of data points and come to the specifics what you asked. So one more point which I wanted to bring to the table is that the MSMEs across the board, if you see across the states, we are seeing a slightly different kind of behavior from credit perspective. In fact, some of the states credit adoption is significantly higher. And if I give some of the reports we have published every quarter, in fact, as of last quarter, UP was almost 20%, 20.7% growth of credit, whereas some of the states were, let's say, at 10 to 12%. Now, why I'm giving this number? Because this number has some root causes. When you look at the credit assessment, you look at basically in a holistic manner. Now, sometimes some of the states have followed the approach of a cluster-based approach. Approach in UP is called ODOP, which is one district, one product. So basically, they have very innovatively created a sort of a pockets wherein your leather manufacturing, textile manufacturing, plastics manufacturing, even hardware manufacturing, it's happening in pockets. So for credit assessment also, it becomes very easy for a bank or NBFC because they exactly know that what kind of business this company is doing, what is the input, what is the output, who is a supplier and who is a buyer, right? Not only in addition, I mean, this is not about talk about the credit bureau or credit worthiness point of view. If you look at the business information data, which is also very crucial, because you'll have to look at three types of data. One is operational data, financial data, and then the credit risk assessment.
Yes.
I think operational data and financial data is also equally important. And that's where a bit of awareness, bit of education, literacy, etc. works, right? But coming back to the point what you said, definitely there is a bit of risk averseness in certain types of lenders. And also one point I want to make it here, credit is not just about credit. Credit is about at what cost you get the credit.
Yes.
In fact, if you get the credit at 10%, your competitiveness versus you take a credit at 18% is going to be significantly different because it in some businesses, you just can't produce 8% extra profit to service that debt, right? So which means that the better you are in terms of your prudence, in terms of managing your financials, keeping your data, working with providers on submitting that to the right set of lenders, that's where the game changes. And that is precise the point wherein certain NBFCs have been very aggressive. And also the type of loan you take, which is if you take a secured loan, the loan will be at a much lesser risk, right?
Yes.
So, public sector banks and NBFCs have been very aggressive. Private sector banks are also there, but obviously they have to look at very cautious approach. I know it's a long answer, but I thought I'll give you a whole perspective of what is the credit cycle for MSMEs.
So of late, the second tier banks have started looking at MSMEs as a growth opportunity. But the cost of acquisition, the risk propensity has to really match. Paula, family offices can play a very important role in domestic pool of capital where they come from the industrial side, where they themselves know manufacturing. Can they play a bigger role in providing that much needed heft to the MSME sector?
Absolutely, because this is a perfect match. We don't have to plan for non-linear returns, but prudent returns along with planning credit debt. So I think as industrial families or business families, we understand both are required. And it doesn't dilute, the balance sheet. It actually just strengthens it. So if there is equity infusion by, let's say, family offices or businesses, along with the understanding that, one can generate good debt, it's a win-win on both sides. And I think, getting sort of a more of a consortium approach here again, where, some of the family businesses come together or investors come together to really focus on this sector and collaboratively invest, I think that can be great. Corporate VCs is something that we have missed out completely in our country.
Yes.
But corporates really traditionally have also invested in smaller, companies,
Yes.
which can innovate much faster. They're more nimble,
Yes.
and that can really feed into the innovation that's been talked about, and really, bring in much more scale, much quicker. And then credit and so on will sort of dilute.
Right.
One big challenge though here is also, along with credit, I think talent is another big
Yes,
challenge
that
that
we
was
spoke
referred
about.
to. And we need skilling
Yes.
to again gain confidence for other families to invest.
So last word on any suggestions on how skilling can be done, and can government get any suggestion on this?
See, at the top level, the policy measures are well in place, but at the ground level, that culture is yet to percolate. Custom clearance is still a pain. There's a lot of inverted duty structure. You import a machinery at zero, but if you want to make that machinery and import some critical parts, you pay 10-15% duty. So we have been told that this is in the works. It should be a thing of the past.
Yes.
I think the crux here lies is scale. And for scale, industries like us, which are 5,000-7,000 crore companies, have to collaborate.
Yes.
The government has come out with a 1 lakh crore R&D fund, where 50% will be given as a low-cost debt at 3%, or something like that. Now, if I have to invest in R&D, my balance sheet would have a constraint. But if 4 companies can collaborate
Yes.
and say, we put in 2,000 crores in R&D over a period of 5 years or 7 years, the government gives 2,000 crores, and that company selects a product. There's no point of 10 companies doing R&D in the same product.
All right. So collaboration and then government
Private sector
support.
level.
That is required in the mid to smaller companies to really attract talent and also attract rightful credit and therefore innovation. Thank you so much, all of you, for sharing your insights. Thanks to all of you for patiently hearing and participating in our conversation. Thank you.